So,
Good morning, everyone, and welcome to the Quantum Leap morning homework session and trade plan setup. For those that are visiting us from Twitter or watching on YouTube, this is Quantum Leap. We are a self-organized learning environment. We've been running a chat room on Skype now for about 4 years. If you're interested in checking out, you can send me a contact request at Doug_McKay. I am the founder and head moderator. I'll be the one from Windsor, Ontario, Canada. Each morning we come together and in a live go-to and go through what the market has done, what the trends are, and set up our levels to trade and our targets for the day. So if you're watching this on YouTube after the fact, we start with some very basic stuff looking at the macro to micro on the key numbers, then we look at the macro to micro on the trend, and then we get into some more in-depth analysis on the volume profile. And then if Howard's got something that he wants to share in terms of Elliott Wave and Fibonacci, we go through his analysis as well. But before we get going, we have to get the legals out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. Only you and only you are responsible for your trades or investment decisions you make. Trading futures or any instrument involves a risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. All right, so obviously, we had news this morning. Let me just bring up the QLTP. So one of the things that Howard and I do each day is we put together what we call our QLTP, which is a ladder above the previous day close and a ladder below the previous day close, which basically has all the key numbers that we're looking at based on the different methodologies that we follow. It's not a trade sheet, it's more of a guide to let you know where other traders might be activating trades. Also has a work area, and of course we've got the daily news. So we had core retail sales and unemployment claims this morning, and we had significant move down off of all the numbers were bad this morning. Of course, Yellen was supposed to testify at 9, but apparently there's a big snowstorm in the east, so that's been canceled, and don't know when it's going to be rescheduled. So just watch out this morning. There could be some headline risk that you might have to deal with. So first thing I like to do is we like to go through the key numbers and take a look at where we are. Obviously, the key number still above us is that 1837.75, the year open. As long as we stay below that, we are in a bear year, but we have come back up into the 1800s, although we've seen a little bit of weakness this morning. Our month high so far has been trending up at 1823.25, and our month low is way down at 1732, so we're nowhere close to being testing the low of the month. The market opened yesterday in Globex at 1813.25, had a high at 1819 and a low at 1811, and then we opened at 1817.25. That's exactly where we closed as well. We closed the RTH session at 1817.25. So we basically had a doji day yesterday as they got up into the 1800s and the bears and the bulls fought it out. You can see that we continue to be trending up in the Globex. We opened auction in range, had a normal variation day, opening swing high 1975, opening swing low 17 for a 2 3/4 point opening swing. Anything larger than 2 points on an opening swing, the market on open orders, or what we call the MOO, generally will indicate a rotational day, and that's exactly what we got yesterday. Initial balance high 1823.25, initial balance low 1816.50. This is the first hour high and low. We watch this for trading purposes and what type of day that we're setting up for. And again, all the intraday numbers you can see are all trending up still. And we had a higher VPOC, volume point of control, at 1816.50. Ranges, 20-day ATRs, just under 17.5 for the RTH, just over 23 for the full session, just over 14 for the Globex. So you can see that our ranges have been expanding again. And then our value area high was just slightly lower at 18.18, but our value area low was higher at 18.13. And we broke the IB. We do a time study for the initial balance break, and we did what we call a make and break in the first 15 minutes of the IB being set, and it was to the low side at 9:33. All times in Quantum Leap are in Central Time, by the way. So let's take a look at the daily report. Have we made? We haven't made a new low, have we? We're still overnight low, 18.25. Yes. Okay. So right now, our 20-day ATR targets for the full session, which only encompasses the Globex so far. Our ATR target to the upside, 18.25.25, and to the low side, 17.94.50. And remember, if you were in the room beginning of the week, we talked about how important that 17.94.50 was for, at least for me and what I'm watching. So, I mean, nothing else really jumps out. So let's go right to the macro to the micro. I always take a look at where we are in the trend within the different time frames, and then drill it down until we get to the intraday. So on the monthly, we are definitely still in an upward trend. We came down. We had this technical gap right here on the monthly. Came down, closed the technical gap on the 9 EMA, and then we bounced off of it. We've got good slope and separation on both the 9 EMA and the 20 SMA, so the trend is still very much intact on the monthly. On the weekly, we had some weakness come in here. We had broken below the 20, and we were looking to violate the trend on the weekly, but then we popped right back up, and we're now trading above the 9 and the 20. We don't have a lot of separation or slope, but the trend is still intact on the weekly. On the daily, we had we had created this this technical gap, closed the tech gap, and rejected the 9 EMA from below. Created another technical gap right here, came up and closed it, and then we popped up and closed above the 9, and now closed above the 20. We're creating a technical gap on the daily. We have an MA squeeze right here, and we're likely to come back down and test this area, and that's going to probably be, by the time we get there, somewhere around that 1794.50 is what I'm thinking. Going over to the geometric chart, we talked about the fact that we had gotten above the lower line of the upward sloping longer term fork that we've been following for months, and that we had bounced off the the bottom of the downward opposing fork and got above the center line of the downward sloping fork. And once we got back inside of this fork yesterday, we were talking about going up and testing the upper line of the downward sloping fork, and we did exactly that. We've now fallen back off, and now we've come down to test the lower line of the upward sloping fork. So I think a key here is if we hold this 1800, there's a couple naked crosses I want to talk about on the 5-minute and on the 15-minute and on the 30-minute down at the 1800 level. So if we hold this, I'd be looking for us to slowly work our way towards this energy point right here, which is going to be in around that 1816, 1817. But if we close below, or if we get below the lower line of the upward sloping fork, then I'd be looking for a move down to close this technical gap on the daily and possibly come down. And if we came down to test the center line again of the downward sloping fork, we're looking in that 1774 area, 1773.75. So let's take a look at the intraday trend, see where we are. We've been trending up on the 4-hour, and we've created a bit of a tech gap, came down and closed it, come down and tested the 20 SMA, and currently right now we're sitting right on top of it. And we've lost slope and separation here on the 4-hour, so we're consolidating. So there's no real trend to speak of right now on the 4-hour. Going down to the 30-minute. We have created a downward trend here. We do have slope, and we do have some separation. We've come up and tested the 90 EMA from below, and so far we've rejected. So coming in on the 30-minute, we do have a bit of a downward trend. I was talking about that that naked cross. A naked cross is a study that I've been following for a few years now, and basically it's when the 9 EMA crosses over the 20 SMA. We watch it on the 5, the 15, and the 30 for intraday trading. We also watch it on a larger time frame, but we look for these as improperly auctioned territory. The market has a very high probability of coming back and closing this and testing this price level again. And you can do your own due diligence on it. It's a very powerful study. And what we do is we look for rotations back there based on our other volume profile entries. So just if you haven't been following the naked crosses, it's something that you might want to start to take a look at. Let's drill down one more to the 5-minute. The 5-minute, we were trending down, and we created this technical gap right here and came up and closed the gap, and we're now coming up to close the gap on the 20 SMA. So we were in a downward trend. The downward trend is starting to reverse here, and we've got sideways consolidation. Of course, we still have about a half hour before the RTH session opens. So let's take a look at the big picture. So for those that are new, this is my composite. These candles are daily RTH candles, and basically this dark area, this black area, is the composite, or the volume at price going back all the way to the beginning of 2013. And then these smaller profiles are what we call microcomposites, and they are balance areas. And what we follow here is we look for the rotations, outside of balance and return to balance. So just we're consolidating, down here. We broke up and we created this balance around 1781.50. That's the volume, microcomposite volume point of control, or where the most accepted price was for the buyers and sellers. Just before we broke out of this balance zone, we came up and we accepted higher value here at 1802.50. Then we broke out of that balance, went up and made the all-time high at 1846.50, and then we created balance around this 1832.25. And then we came down and tested this level, okay, and couldn't hold, so we fell all the way back down to balance around 81. They tried to hold it there. They couldn't hold it. They came down to the prior balance areas in the microcomposite VPOCs. They came down, and we talked about the 1732.50 and how important it was coming down and finding buyers there. They found buyers here. They came back up. They accepted value again at 1781.50 area, then broke back out and got back up into this upper balance area. And so far, we've got price acceptance in a 2-day microcomposite VPOC here at 1814, but we are having trouble holding this right now. And what happened overnight, they came down to this 1802.50 again, the last most accepted price before they broke up and got into this balance area. Now they've come down and tested it again, and so far we've tested it, and we're coming up to challenge this 1806.50 area or 1807 area. You can see that the range high on this area right here, this microcomposite, is 1806.75, and we've been talking about how important it is for us to hold above this 1806.75, 1807.50. This is a low volume though. The buyers and sellers do not like to do business here, and if we hold below it, you've got a good probability that we're going to rotate back down to this 1802.50, test that 1800.50 area, close out those two naked crosses that we have on the 15-minute and the 30-minute, and probably rotate down, and the first target below for me would be the 1798.25. If we can get back up above this 180750 CLVN or composite low volume node, I'm looking for a rotation. First the destination and target will be this 180975, and a continuation and rotation back towards this 1814, and trying to get back inside of the range here of the balance area that's above us. The value area low, or value area, represents one standard deviation, or approximately 70% of the volume that is traded within a balance zone. And the value area low is 1824.75. Value area high is 1840. So if we can hold above this, this 1807, I'd be looking for a drift back up into the current two-day balance in around 1814, and hopefully a push to come up and test that 24.75 lower value area. And then if we can get back inside of value, the big number above us is up there at that 1832.25, which is the microcomposite VPOC from this balance area. So let's take a look at the overnight and start shifting our numbers over. Of course, we are down here at 1806.50. Our close from yesterday's RTH session was 17.25. We're going to open outside of value, outside of range, with a gap fill, and it's a fairly significant gap, roughly about a 10-point gap. So you're half a gap fill, you might be looking at a move back up to come and test that 12 area, and that 12 is the RTH low from yesterday. So if we don't see initiative sellers stepping in here and taking us, further down back towards that 1802 and 1800 area, then I'd be looking for a half gap fill and a rotation back up towards that 1812. But our low so far overnight is 1802.25, and our high is 1817.50, right near the close.
That's just because
I can.
that's just because in the background that's high and change.
Sorry, that's the wrong one. I need the overnight high, not swing. And then our overnight volume point of control, or the most traded price overnight, is 1809. So typically, when you open out of range and out of value, you've got to look for two different types of open types. You've got an open drive where one side takes control and just drives us in one direction, or we go and test two different levels. So let's take a look at where we are. Obviously, the key here is this 1807.50. This is going to be an area that I look to do business, because it is the key, price rejection area. And if we get above there, then I can look for a rotation, back up towards that 1809 overnight VPOC and the 1809 composite high volume node, with hopefully a continuation and a push through to do a half gap close and test the 1812 range low from the RTH session yesterday. So this is going to be a trade area. This is also going to be a target for me. The first target above, of course, is that 1809.50. But if we reject and we get responsive sellers stepping in here at this 1807.50, if we're still below it on the open, I'd be looking to see if sellers step in here and rotate us back towards this 1802.50, the former microcomposite VPOC and the CHVN here at 1802.50, and the overnight low. There's a 96% probability of taking out the overnight low or the overnight high in the RTH session. So, considering where we're trading, if we reject this 1807.50 and stay below it, I shift the higher probability down towards this 1802.25, and that will be my first target below. Actually, I'll put it right at, so you can see it. I'll put it at 1802.50. Come on. That's going to be my first target below with a trade level and a push through down to that 1800 centennial number and taking out those two naked crosses. So we have two naked crosses down here at 1850 and 1800 and a quarter. And of course, I'll be looking for responsive sellers to step in and hold us into that area, and then with the rotation to hold us into the 1800s and back up towards that 1802, 1809 area and test this 1807.50 from below. If we break below the 1800 level, the first major target below is at 1798.50. And then I'd look for a continuation down to test the range high down here at that 95 and a quarter. And then we're back into that, trying to close that gap at that 1794 area and the CLVN down here. And we were watching this level when we came back up to test it, and then we popped up overnight and left it naked still. So it's still down here, and this will be my extended target to the downside. If we get up and we get a bit of a rally going and we get inside of this 1812 area, then I'd be looking to come up and test that value area low from yesterday at 1813. There's that was that level that we had those 2 days right here when we broke out of balance, came down. The buyer stepped in at this 1813.50 area, and we actually had a 2-day microcomposite VPOC, which was shifted right at the close up to this 1833 area. But obviously the buyers were stepping in there. So if we get back above the range low at 1812, look for them to come down. You can see that this was also the closing swing low at 1813. So look for them to come up and test this 1813. And then if we get inside of it, the stupid button has not been working very well. If we get inside of value, then I'm looking for a continuation, and the first target above will be that 1814 high volume node from the lower distribution yesterday, but more likely a rotation up to test the VPOC and close the gap. And if we leave this 1802 and a quarter overnight low and we accept value, then you've got to look for two things. One, three things. Closing the gap, closing the naked VPOC, testing the overnight high. If we get inside of value and we haven't taken out the overnight low, remember we've got 96% probability of coming up and taking out the overnight high. And also, once we accept value, you've got your 80% value area rule to come up and test the value area high if we can hold into the value area. So extended targets to the top is going to be all in this area right here in around the 1817, 18 area. So I'm just going to put a target there. And then I would look for resistance to come in at that 1818 level, which has been a key area for us. It's not marked right now. I'll just put it on there now. The 1818 level was the CLVN that we were watching, but you've got the LVN and the range high from the prior day up there at 1950, and so that will be an area to do business. And I'm not expecting much more of a move than that. Of course, remember that our 20-day ATR target for the full session is that 1825 area, but the value area low from the balance that we were in is there at that 1824, and we've still got that naked, we came up and we missed that naked close by 2 ticks at 1823.75. So this will be an extended target and a trade area that I'll be looking for up here. So that's what I'm looking at in terms of levels and targets for the day. Again, the key line in the sand right now above us is this 1807.50, and I think that's going to dictate whether or not we come down and rotate back down into this distribution area down around 1798 and a quarter, and possibly come down, and get back into the lower distribution, the larger balance area down here at that 1781. Let's take a look at what it looks like on the Renko with Keltner. Keltner center line is going to give you the test of the 1806.75, 1807 area. And we currently have a slight downtrend on the Keltner. So if we stay below that key CLVN and the center line of the Keltner channel, a test of the lower Keltner channel is going to take us down to that 1850. Remember, that's where those two naked crosses are. And testing the the 1800s, and look for responsive buyers to step in around there to hold us into the 1800s. If we get above the Keltner center line, then you're looking for that rotation up to test the range low from the prior day and the upper Keltner line at 1812. Area 1812.25. So you can see how these Keltner lines, Keltner channels, play into the key levels on the volume profile. Quickly take a look at gold. Let's take a look at it first here, because I've been talking about this for quite some time now. I've been following this. This is a longer-term pattern. It's called a descending broadening wedge, and it is a powerful bottoming pattern. And we were looking, when we came up here and tested the upper trend line of the descending broadening wedge, we were looking for it to break out and then get a larger move in gold. And you can see that we're holding above the trend line now. We've come up and we've hit our key targets above, and we're now coming up to test that 1300. So let's take a look at what that looks like here. So right now we found a balance right now in around this 1290. Remember, 1282 was our target. Once we broke above the broke out of the balance that we were in, we were looking to come up and test that 1283 level, and then push through and break above and go up to that 1292. And we're basically finding balance up in this little distribution area. And the key area I'd watch right here is 1288.30. If we get below 1288.30, I'd look for the reverse of what we were looking for, and a rotation back down towards that 1282 number, and a push to the other side of balance, which will be down here at 1776. And if we can't hold above that, your numbers are reversed below. Remember, 74, 72, 65, and then 61, and then 58. But my anticipation is that we hold up here. We might come down to the 1288, 1283 level, and then find buyers and push back up. But I'm anticipating a move within the next 4 or 5 sessions to come up and test this 1300 level at the CLVN. 1300, 1299. And then the big number above, of course, the first target would be your 1309 area, but the big number above is 1315. And I am looking for a bigger move in gold with this longer term bottoming pattern. Anyway, that's what I'm looking at. Howard, do you have anything for us this morning?
Yeah, I can cover a couple things.
Okay, over to Howard.
Okay, so to start with, we'll take a look at the daily chart. From our high at 1846.50, we had what appears to be a 3-wave corrective pattern, and when we hit the bottom here, this level here was right around a 0.382 retracement of the last swing low in June of 2013. And since then, we've had a very strong buyer reaction at that level, and we pushed above the 9, above the 20, and above the 50. 50 is the cyan, 20 is this maroon dashed line, and the 9 EMA is the red line here. So we pushed back, and yesterday closed, the last 2 days closed above the 50 SMA, and so far during today's Globex, we've come back and we're now testing the 50. So this would be a key area for today. And if it holds support, we could just do a little consolidation in this area for a while. Just below that, we have the 9 and the 20 moving averages starting to cross here. So this is another significant level that Doug was talking about earlier, forming a naked cross. So yesterday, when we got to our high, we actually tested this 0.786 retracement from the high of the year down to this last swing low. And we found some resistance there, and we've come back down from there. This is going to be a key level above, up here at 1822. If we break through that level, then it's likely to make a challenge of our all-time high above 1846.50 eventually. So those are the key levels above 1822. Currently we're testing the 50 SMA right now at 18, call it 1806. Below that we have our 9 and 20 as additional support below at 1793 to 94. So those are some of the key levels on the daily chart. So let's go take a look at our market breadth. So we'll start with our sectors. And for quite some time, the only two sectors above their year open have been the utilities and healthcare. They still are running neck and neck for the lead. And yesterday, technology has now just moved above its year open. The remaining sectors still remain below their open. Retail, which had been strong all of last year, has been the laggard of the pack, but has moved higher since we formed our last swing low. And from yesterday's activity, we can see that there's sort of a mixed reaction among the sectors. Some moved a little lower, some moved a bit higher. So that's common as we get to a bit of a consolidation area. So those support and resistance levels we talked about earlier will be key to see where the next swing direction is going to take us. Now we'll look at our advanced decline and up-down volume. So with yesterday's high, we formed our last swing high in the middle graph showing the advanced declines on a 10-day average basis, as well as the lower graph showing the up volume versus down volume on a 10-day average basis. So we formed our last swing low right around January 29th on these two indicators. So what we're going to be looking for, let's move back a little bit in time. We had formed our highs back on October 22nd. Since then, we've got a three-wave pattern forming lows from there while price was still continuing to peak. And just before the last high of the year, these indicators peaked and started moving lower, which was our early signal that the market was getting ready to at least correct, which it did. Then at the bottom of this correction, just before the bottom actually, on January 29th, the indicators started to stabilize, giving us a clue that the market may be getting ready to consolidate or start moving higher, which now it has. So, the key levels, we'll see if we make a higher high from last December 27th here, or whether we're just doing a retrace of this first move down and we're looking to make a move lower. So again, those support and resistance levels we talked about will be key here, and we'll see if we get continuation to the upside in these two indicators over the next few sessions. So that's all I've got, Doug. I'll turn it back over to you. Got about 8 to 9 minutes to the open.
Thank you, Howard. This is going to complete our morning pre-market homework session and trade level. For those that are new, I know it's a lot to go through, but if you're here on a daily basis, it gets easier and easier. It's really not as complicated as it sounds once you get used to the acronyms and just the probable rotations. It really becomes clear, and you start seeing the market more in auction logic. Anyway, everybody have a wonderful day, and as always, trade well, trade safe, and we'll catch you on the flip side.